I only specialize in what I call the really great bubbles.
What is going on YouTube? Happy Sunday, everybody. It's Brendan from Market Makers. Guys, I have a special request for all of you. I don't know if you watch the channel Wealthy On. I enjoy that channel. Adam Taggart brings on a lot of really good economists and forecasters. Anyways, I sent him a tweet. I want to go on the show and talk about market cycles, talk about where we are in the market. I pasted the link to the tweet in the video description, and I'll pin it in the comments as well. But if you guys can click on that tweet, maybe put a nice comment or like the comment, so hopefully he will see the tweet, and then maybe you guys will see me on Wealthy On. And if you haven't already, check out that channel. Like I said, a lot of really good guests are on that channel. All right, guys, we need to talk about what we know and what we don't know in this marketplace. But I want to answer a couple of quick questions you guys have been asking me. One of the questions is, why do so many people miss bubbles? And you hear the rhetoric on the media, you hear the rhetoric from the administration about we're not in a recession, even though we have 2 negative quarters of GDP. Just a couple of weeks ago, Atlanta Fed, which forecasted GDP, had us positive 1.5%. Last time I checked, we were only positive 0.5%. So we may be going into a third quarter here of negative GDP, yet Janet Yellen, the head of Treasury for President Biden, came out last week and said 2023 is looking like it's going to be a much better year. As you guys know, the market is unwinding. We have over 40 countries in the world with double-digit inflation. Inflation overall is at a 40-year high. We have raised rates, which is how the Fed combats inflation, at the fastest pace since Paul Volcker in 1980. We have quantitative tightening. We have a descending market with the consumer getting absolutely crushed with inflation because inflation is compounding. I want you guys to listen to this Jeremy Grantham clip about why so many people miss bubbles and what happens in these bubbles and where he thinks this bubble is going to go. Because these cycles repeat just like in human psychology, and we're going to talk about this clip on the other side. Jeremy Grantham is absolutely brilliant. Again, guys, he forecasted the previous bubbles, traded the previous bubbles, has made billions of dollars, self-made. He's a fantastic forecaster. Not only that, he predicted a melt-up back in 2018 to 2021, absolutely nailed that call, as well as the market bottom the day of after the great financial crisis, S&P 666. Listen to Jeremy Grantham and we'll come right back.
I only specialize in what I call the really great bubbles. If you go back to 1929 to 2000, to Japan and the housing part of the housing bubble, and you ask, how did conditions look? Profit margins looked great. The forecast was great. There was no chance of a recession. A few months ago, smart people were saying there was a 20% chance of a recession in 3 years. I mean, it is quite amazing. And what happens after the bubbles break is there's always a recession pretty quickly. And people never get it. People never forecast it. And along with the recession comes a drop in profit margins. Going into the bubbles breaking, profit margins are always at a peak. Bubbles don't peak for no reason. They peak because economic conditions are nearly perfect. And that includes low inflation and high profit margins. And the first thing to go in a recession, of course, is the profit margin. And that is very likely to happen this time. We should be in a recession, mild or severe is the question. But we should be in some sort of recession fairly quickly, and profit margins from a real peak have a long way that they can decline. And if you want to get into the longer term, I think this kind of 2000 bubble that we have is dangerously likely to morph into the 1970s, where inflation is always a part of the background discussion and where growth rate starts to dwindle away. So you have shades of stagflation as we had in the 70s, where commodities are intermittently scarce, price jags here and there, as we have seen recently, where the whole system is so strung out and so borrowed that it's lost its resilience. All you have to do is cough in COVID or a war in the Ukraine, and you see the problems ricocheting around the system that was not designed to absorb any kind of punch. Last minute inventory delivery, no reserves, putting all of your business with one country far away, no flexibility, no resilience. And now we begin to pay the price.
That's right. Like Jeremy said, what happens after the bubbles break? There's always a recession very quickly, and nobody ever forecasts it. Guys, going back to the great financial crisis, the government didn't come out and say we were in a recession until 8 or 9 months or more after it actually started to crash. You would have missed 2/3 of the crash in the market if you waited for the government to tell you you were in a recession. Just like that, Jeremy made this interview back in May, and he absolutely nailed it. We've had 2 negative quarters of GDP since then, working on our 3rd negative quarter of GDP. Yet when you watch the media, the big banks, including Goldman Sachs and some of these big money managers, they're still saying, 30 to 50% chance of recession, maybe second half of 2023. They miss it every single time. Now, not to go full Jordan Peterson on you, but you have normalcy bias in the marketplace. When you live in an echo chamber and you view everything bullish because all you know is the longest bull run in stock market history, buy the dip, that's all you know. You're going to have this bias, guys, but where we are now in the market is down 24% on the S&P, Bitcoin down almost 75%. We're going to get into all the numbers today, but this is what I'm stressing to you guys over and over again. Your view of the marketplace is going to dictate your actions in the market. And if you can view the marketplace unbiased, if you can view it unemotional and almost be like a robot, right? If you can almost be like a robot in the marketplace, you will make cleaner decisions because there's been keys along the way to watch a descent in the market to understand where we are. So let's talk for a minute about what we know and what we don't know. Like I said, we know that we have over 40 countries now with double-digit inflation. The UK has double-digit inflation. America has 40-year high inflation. We know that the winter is coming, and we know what's going on with the conflict in Europe, an energy crisis in Europe. Overall, the Eurozone is our second largest trading partner. So if you think about how those countries are going to suffer, and again, mainstream media, mainstream banks saying they could face a depression. That's mainstream media. Well, guys, we live in a global economy. That's not a bullish scenario for us if the Eurozone goes into a depression. It is not a bullish scenario for us to have the dollar at a 20-year high. And we've been talking about the dollar extensively on this channel. Guys, since I made that last video, we were at 111. We are now at 113. We got to 121 at the peak and the dot-com crash. Okay, we got to 121. We are easily going up from here. Okay, I want you to understand that. So we have the dollar rising. We have stocks having overall the worst 6 months of their performance since the 1930s, where stocks went down 84%. We have all of these metrics telling us that we are trading in a bubble. Metrics such as the S&P before the Fed started printing. The S&P would typically return about 8% a year. After the Fed started printing, you'd get 10 to 12% a year. Over the last decade, the S&P returned 120% in the first 8 years. The last 2 years since the pandemic, with the additional money printing, another 120% in 2 years. You did 8 years worth of returns on normal Fed inflation, normal Fed money printing, and you did it in 2 years. That was your acceleration into the bubble. The S&P now has gone up 240% in a decade. Let that number sink in. You normally return 8% a year prior without Fed money printing, and you went up 120% in 2 years. You have to understand the marketplace you are trading in, and that liquidity has to come out of the market. And I totally agree with Jeremy, and I totally agree with Ray. Ray Dalio is another person. His hedge fund, the numbers, I was just looking at the numbers that were reported last week. It's up 32% for the year. When the market is down 24%, Ray's hedge fund, the largest hedge fund in the world, Bridgewater, is up 32%. So when you guys are watching the media and you see these panels of money managers and they're like, well, yeah, I'm only down 10% right now, and that's really good. Everybody nods their head. That's really good in this market. You're only down 10%. If you understand the market, you can make money. When Bitcoin first lost 30K, Scott Miner did an interview. I showed you guys this clip before, worth revisiting a couple of 3 months ago. Let me go ahead and play this clip for you now about where he sees Bitcoin going. Keep in mind, Bitcoin had just lost 30K.
Guggenheim CIO Scott Miner said Bitcoin's recent slide could mean some big losses are still to come.
We're seeing crypto collapse the way it is. I think it's got more downside to it.
More downside?
More down.
How much more?
Well, you know, when I look at Bitcoin, which the technicals have been better than anything else, when we break, below 30,000 consistently, 8,000 is the ultimate bottom. So I think we've got a lot more room to the downside, especially with the Fed being restrictive. And let's face it, most of these currencies they're not currencies, right? They're junk, right? I mean, the majority of crypto is garbage. So they're going to be survivors.
His prediction of Bitcoin hitting $8,000 translates to a 70% drop from current prices.
Yep, that's right. Liquidation event. He has Bitcoin going to 8K, and none of this seems crazy when you look at the numbers today, does it? None of it seems crazy at all. Guys, what else do we know? Let's talk about the 7-year cycle real quick. I covered these fib levels. Worth going back to Y2K. Let's look at this. Pulling up here on a fib retracement, Y2K. Why am I showing you this for any of the new subs? Because every single major market crash, 1973, 50%, .com, 50%, Great Financial Crisis, 57% on the S&P, all hit the same exact fib, the 1.128. Every single major crash. So let's go ahead and look at this because we have this on the modern day chart that we are on now. If we pull this up from the low here of the Y2K up to the peak of the GFC, where did you hit? Literally almost to the dollar, the 1.128. And guys, we talked about this before. You don't even have to do this only on the major crashes. You hit the same peak in the pandemic, okay? You hit the exact same fib level in the pandemic. We pull up the fib retracement, get that level. 1.128, 2212. Do you see that? You just barely wick through it. 1.128. This is so important to understand because the market moves in patterns, guys. And if the market, the S&P, the broader market, remember, trillions upon trillions of dollars, if the S&P simply repeats the same exact pattern it has in every single major market crash, that 1.128 here in the modern market, right here where we are, current trend, let's go ahead and take that from the pandemic low up to the peak. You see it right here? Lands you at a 61.8% retracement, the expression of Fibonacci 618. That brings you down to 1841 on the S&P, cutting in half the S&P where it is at now. Again, that last message I left you with last video was everything is going to be cheaper as the market unwinds, and you're going to see that throughout next year as well. I expect a market bottom. This is what we know looking at the previous patterns. I expect a market bottom the year after this year because the Shemitah is ending next year. If we repeat the same cycle from 73, .com and Great Financial Crisis, we will bottom next year. I have that bottom out here in September, October. Most tops and bottoms and these crashes and bubbles happen in March or September, October. So because we're still in the early throes, I went ahead and moved this out to September, October. Guys, another thing that we need to talk about that we know, Elul 29. This is the culmination event for the Shemitah cycle, the 7-year cycle. You're in that 7th year. September 2021, we started the Shemitah, and what happened? The markets topped in November, the S&P in January, and since then, constant declination in price. Now, what's significant about Elul 29, the culmination event, is in the last two bubbles, .com And in the GFC, it was the single largest day point drop. Doesn't have to be, but that starts tonight at sundown, ends at sundown Monday. So we have a market day. Now, futures are not open yet. They will be open at 6 p.m. Eastern on SimpleFX in about 5 hours. Be interesting to see if we do get a major market move, a major single one-day move, or if it's just further decline, or if we try to hold the bottom. But guys, you got to see here on the S&P what we're doing here. If we lose these June lows, okay? If we lose these June lows, we go ahead and go to the daily chart to show you this. If we lose these June lows right here, this is the beginning of your second leg down. Remember, the market moves in threes. You had our first leg down, made our June low, had our big rally up, back up to the 200. Now we're back testing here, as you can see how close this is. Let's just take a fib retracement. Now we're back testing here, the S&P almost at the 100% retracement. You see that? 36.36. If you lose this, the beginning of the second leg down, looking at our targets, that second leg will have you defeating the 200, 233 long-term support, and you would be coming down to 31.41. So that is something that we have to pay attention to see if we get that type of velocity to descend further down, or if we hold this and bounce around here a little bit until we descend. So let's go ahead and look at the Nasdaq. We're going to look at Bitcoin, guys. I got XRP, I got Ethereum, I got gold, I got oil, I got silver. We're going to get into it all. This is a big show. Also, some of you guys are asking me about the Shemitah cycle itself. How come every 7 years we don't have a crash? But I would tell you, and I've answered many of you this way, so I wanted to say it on the video, you're looking at it backwards. The way to look at this as, for the last 50 years, every single major crash that happened in the stock market happened in that 7th year of the cycle. Every single one, 100%. And I'm just talking about the bubbles. I'm talking about 73, 2000 GFC, and now. But the Shemitah cycle also happened for 1980 crash with Paul Volcker, 1987 for Black Monday, the bond crisis in 93, 94. It happened over and over again. So that's what you need to understand. But every single crash, if you're going to have a crash, you want to see if you're in that 7th year of the Shemitah, because every single crash for 50 years has happened in that Shemitah year, okay? That's the importance of it. And let's go ahead and look at the Nasdaq. Nasdaq is bouncing right off its 200, 233 here on the weekly time frame. I showed you guys previous video. If you lose a 200 and 233, you're able to get above it. Remember, these are weekly candles, but you get a lot of turbulence in this area. And in every previous bubble cycle, you're not able to consistently stay above it. You ultimately will capitulate and fall further down. That's this back test area. So once we lose the 200, 233, whether we rebound here a little bit and then come back down, and we come back up and we back test it, that's this wave B over here, okay? And then ultimately, when you lose it and you fall down, that's your third leg. Again, the market moves in threes. Dow knew this, Gann knew this. 3 impulse waves, ABC correction, Gann marketplace pattern, okay? Looking at the Nasdaq here on the daily, you can see here simple fib retracement, almost coming down to the 1 fib at 11,038. We're at 11,314 and almost came down to it. We'll see if we do get to test these lows on Monday, okay? And if we can hold this area, or if ultimately we're going to move up and then roll down. Looking at the Russell is faring the worst of the indices, which is why we short the Russell, guys. 25 to 30% of the companies in the Russell are zombie companies living and surviving off of debt, living and surviving off of loans. This is what Grantham advised last year. He said, if you're going to short the Russell. And that's what I've been doing, and that's what I've been advising, and that's what I've been sharing here on YouTube as well. So if you look at this, the Russell also lost the 300. So that's now resistance on the weekly, which is about 1695, 1700. Want to watch that area. We found support on our S curve here, but if we do continue to come down, remember our target for the Russell is 1521, target for Bitcoin 10,591 on the October 31st weekly candle. Remember, that's a weekly candle, so it is open for 7 days. It's the beginning of the candle. Let's go ahead and look at the Russell on the daily. As you can see here, trend-based fib, 100% retracement of the move here, bounced right off it, 1665. We'll see if we have any velocity or if we just start making a shape to roll down here, okay? Your next support level there at the 1618, we have you below that target at 1507, which would be below 1521. You can put these fibs on, guys. Remember, you can use trend-based fib, you can use simple fib retracements. A lot of you probably prefer simple fib retracements. Grab your swing low, go to your swing high. You can add in the different levels that you want to add in, 786, 886. Put the levels in that you want to see, and you can look at the support resistance targets as you descend. Let's talk about some Bitcoin here, guys. Bitcoin, our weekly price pulse pattern, okay? My price pulse pattern based on the Gann market pattern. And one thing I want you guys to pay attention to here, I know a lot of people probably don't look at the weekly. I know a lot of people prefer smaller time frames. You have a double top here on the weekly. Do you see this double top? I want to show you a couple of things here. Let me turn this magnet off. Let's just do the book, okay? By the book to get a measured move here, right? So let's get confluence on both sides of this trend line. So you have your top here, and then you have your top here. So I'm going to draw this trend line short to get both tops in here. Just place it there at about the bottom. That brings you down to like 14,165. Let's take a trend-based fib. The way I like to measure double tops, let me put the magnet back on. The way I like to measure double tops is the peak, the valley, and the peak, okay? And then you look at this, where this could line up. Look at that. The 1618 is at 13,576. You have that trend line getting almost there. But, you know, importantly here, if you look at this, let's zoom in so you can see the separation a little bit. If you look at this, you have the 618 at 19,276, right? Right now you're trading at 18,880. Okay, 18,880, and you're just stuck right here, almost at that neckline. And we're going to look at this in the smaller time frames, guys. But I want you guys to see this. Look how close you are to this neckline of this double top. Okay, so if you get below this 18.6, 18.5, 18.4 area, you'll see it in the smaller time frames too. Look for a breakdown, and you could be moving down to your targets. You could be moving down to 17, which means you'd be sweeping that 17.5. I don't expect that to be strong support. You could be coming down to 16,369, 15,548, and of course the 1618 at 13,576. That's just this small measurement here based off this double top structure on the weekly. But that's working our way down to that 1618 at 10,591, October 31st weekly candle. Here on the daily time frame through this in the Wyckoff structure, as you guys can see, and you can see right here the 618 at 18,646 doing a trend-based fib projection, hovering on that 18,646. This is your 17,580 here on our BITGET chart. Guys, if you want to trade the cryptos, please do check out BITGET, our sponsor, and you can trade these equities on SimpleFX. Those links, as well as our Twitter, are all in the video description. So just pay attention to this, guys, because if you don't get any type of rebound, if the markets do start pulling down tomorrow and they do have a big sell-off, you know, you can always look at the possibilities of what I like to do with trend trading. Knowing that you are in a descending market, if you start breaking key levels of support, you know, you can always look at taking entries when you break these key levels of support. The key is with velocity. The key is with confluence of the other markets coming down as well, because you are in a very tight trading range here of the 0.5 at 19,437, the 618 at 18,646. You're stuck right between these. Wick in the top, hitting the bottom. Wick in the top, hitting the bottom, okay? Now, remember our compression. We're looking at the money flow, bouncing off a little bit of the oversold area. Let's look at our compression here, the caterpillar. Let's see how compressed we still are. Zoom this out a little bit so you can see this. Guys, this is the tightest compression in the whole bull run of Bitcoin. The bull run, the decline, since the beginning, when you initiated your bull run, this is the tightest compression. You are going to have a major move. And again, I do think that move will be to the downside and confluence with the markets when they roll. If the markets bounce around and try to find support, you may get one of these types of things where you get a move up and then a decline, like you see Bitcoin do. Okay, you can get a move up and a decline. So just pay attention to this, how it works out. Let's go ahead and look at Bitcoin on the 4-hour chart. 4-hour chart doing a wave projection, as you can see from up here, the August 15th candle down to your swing low, up to your swing high. You get that same range that we're looking at on the daily. I like to use the larger time frames for my fib levels. They are stronger on the larger time frames, but you can see the consistency here of what you're doing with these candles, right? Again, the 618 at 18,646. Let's just look at the compression here on this time frame and see exactly where this is at here on the 4-hour time frame. You're tightening up. You see how you get your explosion? You can get really tight and then you get this explosion. So guys, pay attention to what's happening. Got to pay attention to these other marketplaces so you can keep up with what Bitcoin is doing. Let's check out Ichi here on the 4-hour as well. Ichi looks a little bit more docile compared to that caterpillar, but you have a declining cloud, meaning you're going to be hitting resistance and it wants to push you down, okay? Cloud is thinning right here. Maybe you can wave up before waving down. Your 200, 233 long-term moving averages are above you, so you need to pay attention to that because these provide great resistance and trade entries on the 4-hour time frame. Looking at Bitcoin here on the, what is that, the 1-hour? 1 hour, if I lay out the fibs, it's going to show you the same thing. Let's look at Ethereum. Keep this moving along. Ethereum here on the daily fell out of your Wyckoff trading range. You are now on the bottom trading range. Let's go ahead and get a fib projection here as well. Yes, use trend-based fib from the swing high to this swing low. This is a daily time frame where you kiss the 150 simple moving average. And look at this. Look what we have here. You have the 618, which you back tested and kissed. You have beneath you the 1 fib is coming up. You can throw on your 786, 886. You're riding the top of this Wyckoff range from your previous cycle right here, okay? This previous accumulation cycle before you shot up. So you want to watch this. And you can actually, even here, you can always make mini cough type structures, which I do quite often, in very small trading ranges on different time frames. Let's go ahead and do this. If we take array, you can see you have a selling climax candle here. I don't like the dots. Let's get a line. Let's turn this white. You have a selling climax candle here. You have a reaction candle here. It's a very small range you're trading in. This is a daily time frame. You have a down thrust. You have a reaction. You're rolling back up. You roll back up to a lower high. You can see if you start falling out of this, and if you do fall out of this, just like your previous range, you're looking for that back test, okay? So you fell out of this here on the daily time frame. We had that Wyckoff structure. You fell down. You rolled back up and back tested it, okay? You're looking for that back test to previous support, which becomes resistance. That's the daily time frame. Let's go ahead and throw this in the 4-hour real quick. We'll just use the same chart, save some time here. 4-hour time frame, you can look at it like this. You got more candles now, you see that? And you can look at it like this. You're in this very defined trading range, and you want to see how this holds up. Now here on the 4-hour time frame, guys, you always want to be looking at your shapes. Look at this. So you have a double top right here. You see that? You have a double top. This white line is essentially your neckline, and you want to watch that. Now you can get down thrusts that can pull you back up, so you have to watch that. But again, this is all going to be part of watching what happens with the other markets, watching what happens with Bitcoin, okay? And then trying to get into a good entry or a trade, especially as you start losing these areas of support that become resistance, okay? Let's go ahead and look at XRP. XRP is on a pump, guys. We talked about this in my last video. It was pumping when I made the video. I even told you where a good area to look at a potential short would be, where I would look at a short, and it's right up here where it pumped up to, right? So if we do this a couple different ways, let's get our upside projections here of XRP on the daily. We're going to start here at the selling climax candle, and let's go up here to that reaction candle and come down to that swing low. Look at that, the 1618 right there at 49.64. Okay, you see that? So 1618. Now, interestingly enough, you got up above the 150 and the 233, but you got a lot of supply dumped on you, and a couple different ways you can view this. Let's see what this would be if we go from our swing low, our deepest level, up to that swing high, then back down to that swing low. Well, you still got to the 1618, and this layout's even better because you can see no candle bodies closed above this 1618 at spot 5114, okay? Now, you are building some structures here, and you could look at this, like I said, a couple different ways. You had a clear selling climax candle here, okay? You have a clear selling climax candle, you have a big demand wick here, and what happened? You rolled back down, you fell underneath, you kept back testing testing this back and forth, back and forth. I like this line. You can move it around, make your range smaller, and this would be your automatic reaction then right here. So another way to look at here XRP, and I'm going to give you my thoughts on this, okay? Another way to look at this is XRP. You have your Wyckoff accumulation range. You have your spring down here. You shot up. What happens on top of the ranges, guys? You know I beat you to death with this. You want to look for that cup, okay? You want to look for that cup, and you want that cup to back test support, and then you want to come out of it, okay, with some momentum, some velocity. What happens when you don't get the cup? You get a structure like this, where you try to come down, make your cup, and then you fail. Maybe you make a smaller top, and then what do? You make a double top, re-enter the range, okay? So those are the two things you want to look at here. Now, you just fell below the 233. You're going to struggle here, and what I wanted to say was if the markets do continue to sell off, guys, the Dow was down over 1,000 points on Friday. It finished down just over 500 points. It was down over 1,000 points. Now, the Dow Jones swept its June low. The Dow Jones Transportation also swept its June low. And Dow theory, that is a sell signal on the markets, okay? XRP doesn't exist in a vacuum. Yes, you have individual players. Yes, anybody can pump any market. But if Bitcoin, if the indices all start selling off, I would definitely look for XRP to retrace as well, okay? And let's go ahead and look at gold, because I keep talking about gold. You guys keep asking about gold. You know my theory on gold. We're going to 1425 because gold went down 34% in the great financial crisis. This is a 31% decline, and as you can see, we finally lost 1672 as key support, a support that gold has held all the way back to March of 2021 has been swept, okay? So you could see, I guess, in bullish conditions, a back test of this support. I don't necessarily expect to see that, but you could see a back test of this support, but I expect gold to continue to decline. The parabolic rise of the DXY is too hot to handle right now for the metals, and that will all change when the Fed eventually does pivot, when they crater the markets and they have to step in. If they decide to print, you're going to have what Jeremy Grantham just talked about in that video clip, stagflation like the 1970s. I see a lot of smart people, a lot of people I respect saying we're not going to have a housing bubble because, you know, there's no subprime mortgages, the banks are well financed. That was the line, by the way, back in 2008. Ben Bernanke himself said the U.S. economy has never had, or the USA has never had a housing bubble, and it's just merely a reflection of the strength of the U.S. economy. I don't care how well or how overfinanced the banks appear to be. Bubbles do weird things, and you will see things that you didn't think could happen, okay? And what we do know is housing hit a new all-time high. The numbers just came out last week. Hit a new all-time high versus median household income, guys, surpassing what it did in 2008. Okay, the housing bubble, in other words, now is larger than it was in 2008, regardless of subprime, because subprime is just a vehicle to give people who can't afford homes a home. But you, in effect, have the exact same problem now. People that can't afford homes have some of these homes. They have adjustable rate mortgages and other vehicles that they may be stuck in now with these new, much higher rates double what they were a year ago. So we do have this in conjunction with stocks, the first two-pronged multi-asset bubble in our country's history. And I do believe what Jeremy Grantham's saying is correct, and Ray Dalio is saying, and many others, that we will enter a period of stagflation. The bullish case is the Fed's going to win the fight of inflation. It will come down to 2%. I think what's much more likely to happen, and what many people think will happen, but they don't forecast it out and think about what that means, is that you will have stagflation similar to the 1970s. What does that mean? It could mean 4, 5, 6, 7% inflation, moving up and down in waves. And for you, for me, for anybody else watching this, that is compounding on price. I've said this the last couple of videos. Inflation's 8.3 now. Last year at this time, it was 5.9. It's a 14% difference. 2 years ago, the same item you could have bought for 14% less. So if we still have inflation, let's say 5% this time next year, now you're up to 19% more expensive from an item 3 years ago. And guys, that's the Fed numbers. That's not reality. And as you know, looking at food prices, looking at car prices, looking at anything you want to look at, but particularly food and energy, it is up much more than 8.3%. It is up much more than 14% compounding from last year. That's the problem with inflation that the money managers on the media don't want to say. They want to keep saying, well, you know, if we get this peak, I think peak inflation is behind us, the market should rally. It's not peak inflation that's beating people up. It's the fact that inflation is compounding and the prices will not come down when there is inflation. So in reality, the Fed trying to get to this made up target of 2%, which Ben Bernanke invented in 2012, them trying to get there is still an additional 2% of inflation. What is the incentive for producers to cost cut if you're still going to be at 2% more inflation? They're going to want to keep prices the same. We have no price stability, and that is one thing I agree with Fed Chair Powell on. Not having price stability can crater, absolutely crater an economy, crater a market, crater a country. So I agree with these aggressive rate hikes, even though many of the big money managers do not, because their mistake was made in the beginning when they didn't raise rates at all. Their mistake was printing the additional $5 trillion in dollars for the U.S. government to circulate. And that is why we had that blow off top, guys, and that is why we are where we are now. But for the benefit of all of us, for the traders, we're going to have great trades. And for the investors, you just have to be patient, because you literally will have a generational buying opportunity, the same one that the people that waited until the market bottom of March of 2009 got, when the S&P hit 666, and the same way the people that waited until the 2002 October bottom happened on the Nasdaq after an 82% decline. Guys, all of this is coming, and that truly is life-changing money, because if you get in at the bottom, looking at the whole history of the U.S. stock market and the crypto space as well, you truly will have a magnificent opportunity to multiply your money. Looking at silver here as well. Guys, silver, so I put this on here, it's a daily chart. You got to double top that printed right here. I went ahead and threw the trend-based fib to save time. These videos are getting very long. And the 382, 18 spot 74, you can see you're riding that right here, okay? This starts breaking down. You see your targets here, 0.5, 18 spot 35, 618 at 17 spot 965. You can trade the equities and metals on SimpleFX. Guys, consider joining our trading room. Right underneath this video, the join button, full integration into YouTube. I would love to see you guys in the room. We've had a lot of new people join. It's a fantastic community of 11,000 people. Look at one more asset, oil. Guys, oil here is just falling apart. The 300 simple moving average. I told you I was not happy about this unless we got back above these, and you're falling apart even with this energy crisis, simply because global recession. Two words that you need to remember: global recession. This could all change when that first cold snap happens. In Europe, you could see this reverse, but as of right now, 1 million barrels a day of strategic oil reserves being put on the marketplace, manipulating the price because elections are coming up in November. So all of this can pivot, okay? 1618 is at 62 spot 934. Guys, please do remember to click my link there for that tweet, and please do like it. And if you have anything positive to say, I would love to see you say it there on Twitter so I can go and talk about some stock market cycles and help more and more people find their way to financial freedom. All right, guys, have a fantastic weekend. Watch the market open. Watch and see what holds for futures. And we got to see if tomorrow, Elul 29, if we get that big dump or just a continued decline. All right, another video coming soon. Take care, everybody.